Assalamualaikum. We are from BA2422B and my name is Hashim bin Mohammed.
Hi, my name is Muhammad Nazraikal.
Hi, my name is Natasha.
Hi, my name is Sharifah Amalia binti Saiwaka.
Hello, my name is Binisa Farisha and we are going to present about financial system for RHB Bank Berhad.
The financial system is a group of institutions that allow the exchange of funds such as banks, insurance companies and also stock exchange. Besides, the financial system is not only exist on a firm level but also on a regional and global level. RHB Bank Berhad was incorporated in Malaysia as a public listed company on August 24, 1994 under the name of DCB Holding. And on December 19, 1994, RHB Capital was listed on the main market of Bursa Malaysia Securities Berhad, replacing DCB's Bank Berhad, which is now known as RHB Bank Berhad.
First and foremost, let's look at the profitability ratio. Profitability ratio are financial measurement that investors typically use to evaluate a company's ability to generate earnings. Under profitability, there are 5 ratios. The first is the return on asset, which can provide investors with an indication of how effective the company is. After dividing the net income by its total asset, the increase of 0.04% from 2020 to 2031 demonstrates RHB Berhad's strong performance. Secondly, the return on equity can be obtained by dividing net income by shareholders' equity. The results show an increase in ROE of 1.23% in 2021 compared to the previous. A higher ROE indicates that the company is more efficient in generating revenue.
Okay, thirdly, the equity capital ratio examines asset investment and equity to determine how well a company manages its debt and funds its asset. After dividing total equity by total asset, the result in 2021 was a decrease of 0.3%. It was an indication that RHB was incompetently funding its asset while minimizing its debt. What's more, the net interest rate expressed the nominal average difference between borrowing and lending rates. Thus, RHB Berhad performs well in 2021 because it acquires a higher net interest rate, which is 1.40% higher if compared to 2020. Last but not least, the net interest margin is an illustration of the difference between the net interest income generated by banks. It shows poor performance by RHB because the value of the net interest margin has decreased by 11.32%. RHB Berhad is implying inefficient investment by suffering greater losses on its own investment.
Now, we look on liquidity ratio. Liquidity ratio means assess a bank's ability to meet both expected and unexpected financial requests. In this liquidity ratio, there are 2 parts, namely loan to total asset and liquid asset to total asset. First, we go through a loan to total equity. As we can see here, the value of the ratio here increased from 2020 to 2021 by 0.04%. In contrast, the loan to total asset increased from 2020 to 2021. An increase in loan to total asset suggests that the corporation may issue a lot of financing for customers. Second, we look at liquid asset to total asset. The liquid asset to total asset ratio measures how easily a company can access cash and short-term investment. As we can see, the value of the ratio in 2021 is higher than 2020, which is a difference of 3.56. A high ratio indicates that the company is getting weaker as they are less liquid and experience high credit risk.
Next, I will explain about asset quality ratio. Asset quality generally relate to loan and advance that do not default, as these loans are serviced by customer in accordance with the term of the loan agreement. First, non-performing loan. Based on the table above, the NPL of RHB Berhad decreased from 1.03% in 2020 compared to 0.83% in the year 2021. It means each company that has a deal with RHB Bank will easily get a loan from the bank. Next, loan to deposit ratio. Based on the table above, the LDR of RHB Berhad increased from 81.54% in 2020 compared to 83.64% in the years 2021. It means that the bank may not have enough liquidity to cover any unexpected fund demand. Lastly, deposit to shareholder fund. Based on the table above, the deposit to shareholder fund or RHB Berhad decreased from 6.16 in 2020 compared to 6.15 in the year 2021. It indicates that a company used more debt to pay for its asset.
The capital adequacy ratio is a calculation that expresses a bank available capital as a proportion of its risk-weighted credit exposure. There are two types of ratio in it, which are risk-weighted capital ratio and also core capital ratio. According to the table, we can see that the risk-weighted capital of RHB Berhad was increased by 1.85% from 2020 to 2021. That means the bank has a better safety or financial condition. As for the core capital ratio, also has increased by 1.15% from 2020 to 2021, which means that the bank is considered less prone to failure.
Okay, I will move on to the recommendations for each of the ratios. Starting with the profitability ratio, we would like to suggest for RHB to control its net interest income. Meanwhile, to perform a better performance of its liquidity ratio, RHB should wisely control future disruption by improving cash flow management and minimize credit risk by conducting a verification process to manage its asset quality. While for the capital adequacy, RHB can ensure the stability of the country financial system by adjusting changes on the asset side of the bank's balance sheet.
So, in conclusion, in order to manage the calculation of money for economic growth, RHB Berhad has a significant impact, even though our world is now facing a COVID-19 pandemic affecting all types of economy. The government has instituted lockdown to decrease the number of outbreaks within society itself in 2020. As shown in this presentation earlier, all calculations to analyze all ratios are taken from the financial statement that have been studied previously. Using different ratios from a range of categories, it is feasible to examine the company overall performance.